Welcome back. From one auto company to another, we have Motherson Sumi Wiring, which is the next stock on our radar. The company posted a mixed set of numbers. It was a strong growth in revenues, but the stock is under pressure because the margins contracted by 290 basis points year on year because of some one-time costs. They had a startup cost of their new program at Bengaluru. They faced supply chain constraints, additional costs on freight and manpower. So let's find out more. Vivek Chaand Sehgal, the chairman at Motherson Sumi Wiring, joins us now to discuss their Q2 performance. Mr. Sehgal, good morning and happy Diwali to you and your entire team at Motherson. Hope this is a great year for you, health and business-wise. Wanted to start by asking you about this margin pressure, right? In your presentation, you mentioned that these are one-time costs that you incurred. But do you think that there could be more, pressure on your margins? And for the second half of the year, is there a possibility that you could even go to single-digit margins for Motherson Wiring?
Thank you very much for having me. Wish you all a happy Diwali as well and all the blessings. I think the second quarter actually saw, because of the flurry of orders and the automotive market coming back, we needed two very urgent plants, one in Chennai, one in Bangalore. And then we had a couple of some local issues over there where the minimum wages has gone up radically and all that. And those kind of things are there. We have talked to the customers. Customers are very comfortable. They want the supplies, so they are not questioning. And these are in public domain. So I think this particular thing is better looked at if you see the half year numbers. That sort of averages out to this thing around. But these are one-offs, and I think the new negotiation that will take place very quickly will settle the matter for the next half. So I think the story of Rose will continue, and they will do much better than what they have done in the second quarter. But the revenue is heartening.
Yes. We'll come to that in a bit. Just to follow up, in the conference call, you mentioned that the front-loaded costs for both labor and freight due to these new plants that you put up was about 30 crores, which is 1.6% of sales. Just wanted to understand, will there be any additional outsized costs on labor and freight as well as manpower in the second half of the year?
I think, Sonia, it's going to get mitigated because these things are at the this thing of the OEM. And the OEM is very comfortable to reimburse that because he wants the supplies. Sometimes things happen very quickly, and the management is very quick to talk to the customers because there's a specified one-off customers, and take the advantage of a pre-approval from them. So I think this thing would not really affect so much. It'll get normalized very quickly.
Okay, it'll get normalized quickly. Now to the good part, right? You've had, you said that, the orders are coming in thick and fast. And you also mentioned that you're working to onboard more customers for high voltage electric vehicle wiring harnesses across 2, 3 and 4-wheelers. Tell us a little bit about that. How much is the order book now? How much has the kit value gone up? And what would this mean for your revenue trajectory in the full year?
See, the revenues we've crossed a figure of 1,800 crores for the quarter, and that augurs very well. And the demand is going to go up, but I don't want to sort of guess on numbers and all that. For us, it's very important that we supply exactly what the customer wants and the numbers. From the customer side, the kind of feeling that we are getting is if we can supply one more harness, one more set of harness, they are very, very, very happy and grateful. So I think in such an environment, we would leave the numbers to the people. They are buying left, right, and center. But I think there is an equal pressure for two-wheelers, four-wheelers, and three-wheelers, etc., and trucks also. So I think it's going to get even better. than what it is just now.
So you may not want to give us a number, but it's already been a 30% growth, in excess of 30% actually in Q2. You think this is a run rate that you can maintain in the second half of the year as well, the growth rate?
I would be surprised if it's not 30%.
Okay, all right. What about raw material costs as a percentage of sales? That's fallen quite a bit. So, X of these one-off costs, it's operationally an improvement that you're seeing. 66.2% is the raw material cost as a percentage of sale. It was about, it's fallen in the quarter gone by. So, do you see some more improvement over there? And what is the expectation on what the margins could be?
So I think it's a volatile world that we live in. We are very grateful to our customers. Most of it is passed through. And either way, it works fine. And yet, the internal improvements that we are doing and all that, with 2 new plants in the south, it was very quick upgrading to a normal production factory that is going to be key. So I think our attention is going to be more on that. And raw material prices going up and down, we really don't know. People are saying there's a recession coming all over the world. That will augur well. The Japanese yen is at a historic low. So all these things will play out the way they do. We don't really speculate or something on that. Whatever we do is more on the production and the quality and the delivery. That's our focus area on this.
All right, Mr. Sehgal, thank you very much for that. Appreciate you joining in with that. By the way, I just want a quick point, Nigel. The market is at the day's high. Yes. It's back at the day's high. 18,133 is where we are at. So we've seen a sharp move up from about 940 onwards in the last 10 minutes, basically. And it's 123, 125 points higher that we are tracking now. So not giving up any of those gains that we started with and adding a little bit with about 45 minutes of trade behind us. Nigel.
Well, it's, a really good looking